Intel shares are jumping this morning after the company pledged that despite seeing its seventh consecutive quarter of sales declines, its cost-cutting efforts will result in growth to come for the current quarter.
Remain on track to reducing costs by $3 billion in 2023, and we continue to see significant incremental opportunities for operational improvement as we execute on our internal foundry model.
And the chipmaker also gave a better than expected sales forecast as it battles with waning PC demand. Yahoo Finance's Dan Howley is here with more. Dan?
Right, Diane, the big news here for Intel obviously is a beat on the top and bottom line, but there's a little more to dig into. So let's just go over the base numbers. Revenue for the quarter came in at $14.2 billion versus expectations of $13.5 billion. EPS came in at 41 cents, adjusted EPS, versus expectations of 31 cents. Part of that has to do with the client computing group. That's basically the PC chips that they sell to other vendors. That came out at $7.9 billion versus expectations of $7.4 billion. So seeing a uptick there, continued uptick as far as overall revenue goes for that group, and that leads into the recovery for PCs that we're beginning to see. PC sales should start to really pick up now after really difficult comps from last year. And if you listen to Gartner, for instance, they'll tell you that they're seeing improvement as far as overall PC sales go into 2024. One of the things that's worth pointing out, though, is while they did beat on the client computing side, the AI data center side missed. That revenue came at $3.8 billion versus expectations of $3.9 billion. And you would expect that, with the AI hype and craze going on, that would really have caused the stock to get hammered, but not so. Intel basically continuing to turn itself around and returning to profitability after a big miss a few quarters back. I think seeing the results that came in, investors were more than happy to get that. And one other thing I want to point out is during the call, Pat Gelsinger basically, obviously went over the entire roadmap that they can for now, as far as what they're doing with Foundry, with chips. But he also was asked about potential competition from Nvidia and Qualcomm building their own CPUs. Now, Nvidia does make CPUs. Obviously, they're known for GPUs, graphical processing units, but they also are making their own CPUs in servers. Those are only for servers right now. CPU is basically, if you don't know, the brain of any computer. And you need them to work alongside GPUs to have anything really work well for you if you're doing AI. On the PC side of things, though, Intel is reportedly working on its own CPU based on ARM technology. Qualcomm just unveiled its own CPU. And so Gelsinger was asked about the potential competition, and he basically poo-pooed that, kind of cast it aside. He said, in the past, ARM and Windows alternatives have been relegated to pretty insignificant roles in the PC business. He said that while they take all competition seriously, they're going to let history be their guide here, and they don't see these potentially being all that significant overall. So kind of just, slam dunking on the upstarts, even though those same upstarts are dominant in their own respective fields, Qualcomm in mobile and Nvidia in GPUs.